All right, Peter, I thought a great place to start the conversation. Let's just let you get your victory lap out of the way. Gold's at an all-time high. Silver's at an all-time high. What is driving the bull run in precious metals?
Well, I think what you're seeing is the acceleration of de-dollarization that began really a couple of years ago. I think what started it in earnest was the Biden sanctions against Russia, which really was a wake-up call for the rest of the world that they need to get rid of dollars. They need to have a more secure reserve that can't be just confiscated at the whim of the United States. And then I think it accelerated with the election of Donald Trump and the complete reckless and irresponsible spending by the Trump administration, despite the fact that Trump campaigned to try to do something about the reckless Biden spending. He made it worse. The big, beautiful bill just expanded on the excess spending and made it clear that we're never going to get our house in order. Then on top of that, Trump imposed the tariffs and vilified a lot of our trading partners for basically participating in the dollar's reserve currency status. And he's beating up the Fed about how stupid and what a moron Powell is, and we've got to slash interest rates, and he's trying to fire the FOMC members that he disagrees with so he can put his own cronies up there. So really throwing into question the independence of the Fed. And so we've basically told all the foreign central banks, get out of dollars, get out of treasuries. You're going to get wiped out to dollar debasement, that inflation. And where are they going to go? There's only one alternative, one viable alternative to the dollar, and that's gold. They're not going to, move into euros or pounds or Japanese yen or RMB. Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think, just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold.
All right, so let's unpack some of what's happening in the gold market. Let's first start with gold as an allocation in a portfolio. In 2014, I saw a clip online of you saying that gold was going to go to $5,000, and you're getting laughed at, right? They're just clowning you on television, and it took a while, but here we are. Gold is definitely headed to that. And so I think that you're going to get a little bit of a victory lap, although the critics will say it took too long. But that case is gold is also outperforming stocks over the last 25 years. Gold's outperforming stocks as well over the last 5 years. And so I think a lot of people are saying, wait a second, maybe this should be in my portfolio. I have seen Ray Dalio say that gold should be a 15% allocation in your portfolio. I have now seen people say the 60-40 should actually be 60% stocks, 20% bonds, 20% gold. How do you think about gold? Yeah, how do you think about gold in a portfolio?
Yeah, I mean, the reason I put that clip from 10 years ago up on my X account, and that was when gold was at 1,200, right? But that was typical of the way I was treated on like a CNBC when I recommended gold. Everybody laughed at it. They said it was a stupid investment. They said that the only reason I'm recommending gold is because I'm a gold salesman and I'm just trying to get people to buy gold. And of course, they never said that to stockbrokers, of course, which I also was. But you have all these investment advisors and stockbrokers recommending stocks, and they never question their objectivity. They don't question the objectivity of the Bitcoin community. Somebody comes on like a Michael Saylor and says, buy Bitcoin. No one says, well, come on, Michael, you're only saying that because you're leveraged and loaded up with Bitcoin. No, it was only me who recommended gold that they just accused me of just talking my book and being disingenuous and trying to scare people into this lousy investment. And the bottom line is it was a good investment. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. You know, they keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, maybe we should have gold in a portfolio. Yes, right? They should have had it in their portfolio 25 years ago, right? But the fact that they're now starting to include it, not only does that, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof. Because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up. Yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, Morgan Stanley said the 60-40 portfolio should be 60-20-20, where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold because all that is more inflation and more reasons to get rid of your dollars.
Before we get into some of the structural macro stuff, China, their central bank has been a big buyer of gold. You may argue actually that China has been the catalyst for a big part of this move in gold. What is going on there? Is this a true decoupling? Are they preparing for something? Is there some strategic decision that they have made? Is it the Russia sanctions? How do you evaluate China's central bank buying so much gold?
Yeah, well, first of all, we've made it clear that China is our enemy, right? And so China recognizes that, despite the fact that they're our biggest supplier of goods and one of our biggest lenders, right? So talk about biting the hand that feeds you. We have owed a lot to China, and we've basically framed them as our enemy. And so why would our enemy want to hold its reserves in U.S. dollars and U.S. treasuries where they're extremely vulnerable? So I think China is completely divesting. It's on that path of replacing its dollar reserves with gold reserves so it can truly have an independent monetary system. I think eventually they're going to depeg the Hong Kong dollar from the U.S. dollar and maybe peg it to an RMB that I think ultimately will be backed by gold. I think the Chinese are headed for a Chinese currency that is backed by and maybe even convertible into gold, just the way the U.S. dollar was at once upon a time. I think that is the direction that they're going. And China is the world's biggest gold producer, so they have a lot of gold in China that they're producing. They just don't export any of it because the Chinese government buys it as fast as they could dig it out of the ground.
All right. Now, one of the things that has become very popular over the last, 3 months is the idea of a debasement trade. And the debasement trade is basically gold and Bitcoin. Hold Bitcoin for a second. We'll get to that in a minute. But the debasement trade, I think, is different than an inflation trade. And one of the stats that I think people don't realize is that the M2 money supply is growing 2.5 times faster than US CPI. And so you actually have the currency circulation is exploding, which is related but different to CPI and inflation. Describe why you think the debasement trade narrative is now taking hold.
Well, people are recognizing the path that we're on. I mean, the idea that the Fed is going to maintain 2% inflation is now a complete fiction. Nobody believes that anymore. I don't even think the Fed believes it. And I don't even know that they have a target anymore. In fact, the only reason they had a 2% target was because we were below 2% for a while. And so they invented that target as an excuse to create inflation. But now that we're well above 2% and they still want to create inflation, there is no target. But people are appreciating that fact, and they're starting to get out of dollars and into other assets, whether it's, gold, stocks, or, crypto. I mean, I think the people that are choosing Bitcoin are making a mistake, but they're choosing it for that reason. They think they're getting out of the dollar into something better. And the CPI, right? When you're looking about inflation, the CPI is a very flawed measure of the effects of inflation. And that is by design. It's not a coincidence that the government designed a methodology for tracking inflation that understates how much inflation there is. Because the government creates inflation on purpose. Inflation is a tool that the government uses because it solves a lot of their problems. Of course, it creates problems for the people, but governments love inflation. But since the people don't, government wants to create inflation, but not let anybody know how bad it is. And so, that's why they shouldn't be the ones that track consumer prices, but they do. So the CPI doesn't really capture what's going on. So if you look at the CPI and, prices are going up 3%, that's not even close to reality. You have to at least double it, if not more, to get a more realistic, assessment of how much prices are going up. But what really is inflation is not prices rising. That's an effect of inflation. Inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And it's why people now want to get out. They want to get out of their US dollars and into something that will retain its value.
Now, we see the Federal Reserve, historically, people talk about inflation and interest rates, and those are intertwined. But the Federal Reserve cut interest rates in September, and their excuse or their reason was the labor market. They said, hey, there's this weakness in the labor market. That's the reason why we're cutting. We aren't worried about some sort of inflationary thing, or at least we're less worried about inflation than we are about the labor market. There's the economist from Apollo, Torsten Slok, who recently came out, and he talked about the fact that we are seeing weakness in the labor market because of immigration. A lack of immigration. We are seeing the AI implementation. And then also we're seeing less government jobs get created. And so when you look at this, how much is the Fed actually going to fuel the rise of these asset prices? Because historically, when we had loss of jobs, that was recessionary. Now it seems like if we get weaker job market, the Fed is actually going to push asset prices higher. It's almost the opposite of how it's historically been.
Yeah, the Fed is using weakness in the labor market as an excuse to cut rates, as if rate cuts are going to strengthen the labor market. They won't. I mean, the labor market is not weak because interest rates are too high. I mean, interest rates are too low. I mean, that is one of the problems in our economy. The reason we don't have enough domestic savings, the reason we don't have enough manufacturing is because we've had interest rates too low. We've had excess consumer spending, excess borrowing that has, inhibited real economic growth. So what these rate cuts are going to do is just strengthen inflation. not the labor market. And I think the rate cuts are actually going to weaken the labor market because higher inflation is going to, dampen real consumer spending, and it's going to lead to more layoffs. So what the Fed is doing is not going to work. Now, the other thing they're trying to do is prop up the housing market because home prices are too high and they need to come down. But rather than letting real estate prices fall, which is the obvious solution to the affordability problem, the Fed wants to drive mortgage rates down so that people can borrow more money to overpay for homes. That's not going to work either because mortgage rates aren't going to come down. I mean, the only rates that may come down would be the short-term rates. So you may start to see more people taking a risky adjustable rate mortgage in order to get a payment that they can actually swing. But we've seen that movie before, and we know how it ends.
Now, when you start looking at the Federal Reserve, there's been a lot of questions about independence of the Fed. I think that there is something about gold and Bitcoin, which is I don't have to trust anyone. There's no monetary policy that's being set. There's no kind of backdoor meetings. There's no pressure from politicians in terms of what's going to change about these assets. The Fed is the complete opposite, and it seems like that's now coming to a head. And there's the political pressure, but also there's a lot of folks just saying, look, regardless of which political aisle I'm on, these people are not the independent, unbiased folks that everyone has been saying that they've been.
Yeah, well, I mean, first of all, I've always believed that Fed independence was, a pretense, that behind the scenes, the Fed and the U.S. Treasury, worked hand in glove. But they didn't want that perception to be there. They wanted our creditors to believe that there was independence and that there would not be political pressure on the Fed to just create inflation and, debase the dollar. Because if you're a creditor of the United States, you want to know that the value of the dollar, is going to be maintained and not sacrificed for political expediency. But I think what the Trump administration is revealing is that pretense is a pretense, that there is no legitimate Fed independence, that the Fed is very much political, and that is the problem, because you destroy that pretense. And now why hold dollars? Because obviously a country that has as much debt as we do, there's a lot of political pressure to create inflation, to repudiate that debt rather than to honestly repay it. And so why would you want to be a creditor if it's obvious that you're not going to get paid? That yes, you might get your dollars back, but by the time you get them, they won't buy very much. So why not get rid of them now? And so this is the danger that we're facing. We're accelerating the realization that this was just a pretense and that the Fed is an arm of the U.S. Treasury, which is, it's not supposed to be. It's supposed to be completely independent. And, the reason that it's independent and it's a private, it's not a government agency, it's private. The reason was because the Constitution didn't even authorize the federal government to issue paper money. So it couldn't do it. So it created a private enterprise, the Federal Reserve banks, that could do what it constitutionally had no authority to do. But I mean, today, the judges or the justices of the Supreme Court are unlikely to, enforce the monetary restraints that are imposed by the Constitution, but they very well may uphold Trump's ability to fire Lisa Cook by claiming that the whole concept of an independent Fed itself is unconstitutional. And really let the world know who controls the printing press.
All right, I want you to take off your gold hat for a second. I want you to put on your hat of a truth teller. I want you to be a serious person, and I want you to explain to me why gold has outperformed Bitcoin so far this year, up over 50%. Bitcoin's up about 35%. But over the last 5 years, gold's up somewhere in the ballpark of 100%. Bitcoin is up 1,000%. Why do you think that Bitcoin is not valuable? Or have you changed your mind? You now own Bitcoin and maybe think that gold and Bitcoin is the debasement trade that everyone should be allocated to.
Well, the reason that Bitcoin is up that much is because there was a big drop in Bitcoin and then it had a huge rally, right? But if you look at the peak from Bitcoin, which was in 2021, when they had right after the ETFs came out and all that, or or there was, Bitcoin got up to 69,000 in November 2021. And at that time, gold was around 1,900. Today, Bitcoin's around 123,000 and gold is over 4,000. Bitcoin is about 15% lower today than it was at that peak priced in gold. And so to me, that was peak Bitcoin. Even though technically in August of this year, Bitcoin got a little bit higher than that in terms of gold, but not much, but has since collapsed. I mean, Bitcoin then declined by a full 20% priced in gold.
All right.
Maybe it's down about 18% right now from its peak from August. But
I want to make a bet with you. I want to make a bet. This is a gentleman's bet. Right now, gold is up over 50%. Bitcoin is up somewhere 33, 35%. By the end of this year, I believe that Bitcoin's 2025 return will be higher than gold. If I am right, you have to tweet out and say, Anthony Pompliano was right, Bitcoin beat gold this year. But if I'm wrong and gold outperforms Bitcoin in 2025, I'll tweet out and say Peter Schiff was right, gold outperformed Bitcoin this year. Deal?
Well, I guess we can make that bet. I mean, I have no problem collecting on that.
So you think that gold will continue to outperform Bitcoin, and by the end of December 31st of this year, you think that gold will have outperformed Bitcoin for 2025?
Yeah, I mean, I think there's a lot of downside risk in Bitcoin. I mean, I think Bitcoin is much more highly correlated with the NASDAQ. And tech stocks, the NASDAQ made a new record high yesterday as well. So risk assets have been in favor, and there's been a big appetite for risk. But we can easily have a correction or a bear market in risk assets, and that would include Bitcoin. And I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue, but the Bitcoin rally can't, because Bitcoin is going to follow other risk assets, because at the end of the day, that's what it is. It's not a safe haven store of value the way gold would be. It is a highly speculative asset that people buy because they think other people will pay more for it. And that's, the same dynamic that drives a lot of momentum stocks. I mean, they get, devoid of the fundamentals. People aren't buying momentum stocks because they have a good dividend yield or because they have a low PE. They want to just jump on a moving train, and they're afraid to not be on it because everybody else is in on it, and they want to get these paper gains. And so that's the same thing that's happening with Bitcoin. But there's a big risk that dynamic can reverse. And I think the biggest risk for Bitcoin is all the money that has piled into Bitcoin ETFs that came out of gold ETFs, that came out of gold stocks. A lot of those investors may well try to switch back. They may try to say, you know what, I sold my gold stocks and I bought Bitcoin ETFs. I would have been better off if I just stayed in my gold stocks. Maybe I'll go back to them. I think I got rid of them too soon, and there could be a lot of selling. And then you have a lot of these, Bitcoin treasury companies that have also been the big buyers of Bitcoin. I think that whole trade is going to blow up. And a lot of these Bitcoin treasury companies are going to go out of business. And when they have a going out of business sale, what are they going to sell? Well, they only have one thing to sell, their Bitcoin. So, there's going to be a lot of Bitcoin for sale. I don't think the U.S. government's going to step up and buy it. I think that's all a bunch of hype about the strategic Bitcoin reserve. So, there's a lot of downside risk in Bitcoin. I don't see a lot of downside risk in gold at all. I see a lot of upside potential, though.
Maybe you're right. Maybe you're not. Obviously, I disagree, but we'll find out on that front. You mentioned President Trump. He has put what many would consider very different economic policies in place compared to his predecessor. There are things like the tariffs. There is obviously the immigration kind of crackdown. You also see spending, which you mentioned. Talk through, what is the grade that you would give the Trump administration on their economic policy so far in the first, 6 to 9 months of this administration?
Oh, I mean, I give Trump an F when it comes to economic policy. And the Trump economy, is not that much different than the Biden economy. I mean, the biggest thing is the massive government spending and the massive deficits. And so not only is that the same, but it's actually worse. Yes, we've added on tariffs, but I don't like tariffs. I mean, I'm a free trader, and tariffs are taxes. We need more taxes, unfortunately, because we have huge deficits. But the tariffs, the way they're being operated, are just going to make American industry even less competitive. And it's going to result in the manufacturing sector, what's left of it, shrinking even more. But what I particularly don't like about the tariffs, too, not only the unconstitutional way that they've been imposed, because they really need to be imposed by Congress and they need to originate in the House because they are taxes, and that's how taxes are supposed to be raised in the United States, not enacted by a president, but passed through Congress. But I don't like all the exemptions that are being thrown about, and how Trump uses the tariffs as a weapon to try to get companies to give concessions or to do things that they might otherwise not do, but for the extortion of, well, if you do this, we'll exempt you from tariffs. And I also don't like the fact that, some companies can bribe their way out of the tariffs, larger companies, whereas smaller companies are stuck, paying the tariffs. So I don't like this kind of central government planning, this micromanagement of the economy. Trump was very critical of Kamala for the socialist policies that she advocated, yet he's pursuing a socialist economic agenda of his own. So I don't like anything that Trump is doing when it comes to the economy, right? There's some stuff that he's done that I can support, but it's not economic. The economic policy is horrible, and the precedent that it's setting is even worse, because Trump's not going to be president forever. And it's most likely that the president who's going to follow Trump is going to be the most left-wing, radical socialist Democrat that we've ever put into the White House. And the reason that I'm convinced that it's not going to be a Republican is going to be because the economy is going to be so much worse in 2028 than it was in 2024 that no one's going to vote for 4 more years. It's going to be another election about change, where the incumbent party gets blamed for the mess, and now you have somebody else coming saying, I'm going to clean it up. And so it's not going to be another Republican, because the Republican brand is going to be completely tarnished, just like it was after Bush, right? And then we got 8 years of Obama. And the reason that Trump was able to beat Hillary Clinton was because the economy was bad under Obama. And so the voters wanted to change. And then the reason that Trump didn't get reelected, it was because the economy was worse at the end of his first term than it was at the beginning. And so the voters took a shot on Biden. And then the economy got worse under Biden. So they went back to Trump. And now it's going to get worse under Trump, because the fundamentals are not being changed, right? Both parties are pursuing the same failed Keynesian economic policies. And so that's why we don't get a different result. But the public doesn't get this yet. They just go back and forth between Tweedledee and Tweedledummer.
Now, last question. If you were Fed chairman, Treasury Secretary, or president for a day, what are the policies that you would implement that you think would actually change the fundamentals?
Well, practically, the one thing that I could do as president would be to refuse to sign any budget that was not balanced, and refuse to sign off on any increase in the debt ceiling. Then, if I could get 1/3 of the House or the Senate to support me, meaning my veto could not be overridden, Congress would have no choice but to eliminate at least 1/3, maybe 40% of the federal government, because they would have to reduce spending in line with tax revenue. And so that would cause a massive, collapse in government, which is what we need. We need to shrink government dramatically, because big government is the problem. Now, of course, we also need higher interest rates, which we're going to get. And I think that if we couldn't borrow more money, then we couldn't pay the interest on the debt, because the only way we could pay interest on the debt is to borrow that. And so that would force a restructuring of our debt, which I think we need. I mean, I know that there's no way we can repay the debt. The current plan is to inflate it away. I think that is the worst way out. I think an honest restructuring is better for everybody, including our creditors, than massive inflation. It's just politically embarrassing to admit that we're broke and that we can't pay our bills. But I'd rather admit the truth than perpetuate a lie. And I'd rather, get the country on a sound economic foundation rather than continuing to perpetuate, this bubble that we have. So there's stuff that I could do. And then I would try to get rid of as many regulations as I possibly can. I mean, a lot more than we're getting from Trump. I mean, rather than, Trump wants to try to price control, like with drugs. He's trying to force companies to lower their prices. I don't want to do that. But what I would like to do is eliminate a lot of the regulations that have caused drug companies to have to charge so much for their drugs in the first place. That's what Trump could do, is remove a lot of the regulatory barriers that the federal government has enacted that make it so expensive to develop new drugs. Get rid of those, and then costs will come down naturally. The government won't have to coerce companies into lowering prices. The free market will cause them to lower prices.
I like you. You know why? I felt bad for you for a while. It was, Bitcoin was just outperforming gold so aggressively. It wasn't even fun to talk anymore because it was just like gold was just kind of going sideways. But now that gold has woken up from its slumber and is doing well, it's fun. Like I feel like we're like brothers in arms against the government debasement.
Gold is selling off now. We're getting a bit of a decline. In fact, silver, which was up $2 when we started this interview, is up less than $1 now. Let me see. Gold is
imagine if this interview marks the top of the gold bull run.
Gold's only up $1. No, it's not. There's no way it's going to mark the top.
All right, where can we send people to find you on the internet?
Well, I'm all over the internet, although I'm not as proliferate as you are. I mean, you surpassed my X followers. I remember when I was way ahead of you, and you just completely passed me.
Yeah, well, it's kind of like Bitcoin and gold. I just shot right by you.
Yeah, exactly. Well, that I'll catch up in the end.
All right.
But you can follow me on X. I'm posting a lot there. You can go to my YouTube channel, Peter Schiff. I do my podcast there, and on Schiff Gold, we have our own YouTube channel there. I do every Friday. I do the Schiff Gold Friday market wrap and discuss what happened in gold and silver during the week. And look, if you own Bitcoin, look, at a minimum, you can't just be all in on Bitcoin. You got to take some chips off the table. You got to have a hedge against your Bitcoin. And gold and silver are a great way to hedge Bitcoin. And you don't have to sell all your Bitcoin, but just sell some of your Bitcoin. And at Schiff Gold, we make it real easy. You can go to Schiff Gold and you can go online and you can check out with Bitcoin. You can use BitPay and you can buy real money, real gold and silver with your fake money at Schiff Gold. So
Peter, we got to go.
Just in case.
The connection's breaking up, my friend. The connection's breaking. All right, we'll talk soon.
All right, take care.